Welcome back to Investing Talk Podcast.
Today, we're looking at Nokia. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave in the comments below.
So let's get into the analysis. It's definitely an interesting time for Nokia. Looking at all the recent data, the feeling is pretty strongly bullish. I'd maybe put it at an 8.5 out of 10.
An 8.5, okay. That's high.
It is, but we need to unpack why it's that high because, let's be honest, Nokia hasn't exactly been a market favorite consistently,
Definitely not. But that bullishness, you could see it immediately in the price, right? That October 23rd chart shares popped, over 10% after the Q3 numbers?
Yeah, a big jump. That's not just noise. It feels like the market saying, okay, something fundamental's changing here.
And the analysts piled on pretty quick.
They did. Deutsche Bank, for instance, they didn't just nudge their target. They gave it a serious boost, EUR 4.25 up to 4.75, and really doubled down on that strong buy. When a major bank does that, especially in the competitive European infrastructure space, people take notice.
But what's really driving it, is it just good Q3 results?
Yeah.
Because the sources seem to suggest it's more than that.
That's the key thing, I think. The Q3 results were solid, stable. They reinforced that narrative. But the real driver, it seems to be these strategic partnerships.
The Microsoft deal, Nescale, Gulfbridge International, that kind of thing.
Exactly. It's positioning Nokia right at the heart of AI and 5G network build-out.
So they're kind of shedding that old maybe just phone company or hardware image?
Completely. They're becoming, fundamental enablers, building the actual infrastructure for where tech is going. And the charts back that up, technically speaking.
No.
The stock's now trading comfortably above both its 50-day and 200-day moving averages.
Right. And for listeners who maybe don't stare at charts all day, what do those moving averages really tell us? Why is that significant?
Think of them as momentum gauges. Above the 50-day, that's good short-term strength. But when it's also above the 200-day, that signals more of a sustained long-term bullish health.
Yeah.
It suggests the stock's broken free from older patterns and has real upward momentum going into Q4.
Got it. So the technicals look strong. Let's shift gears to the fundamentals, the bedrock. Does the financial health actually support all this excitement?
It seems to, yeah. The stability was pretty impressive, actually. Revenue over the last year is sitting around, $23.17 billion. Solid number.
Okay.
But the interesting part is the efficiency. Net income is $1.09 billion over that same period. They've clearly focused on operations and shifted towards those higher margin areas, infrastructure, cloud services.
And that shift, that focus, it really shows in the earnings recovery, doesn't it? The numbers show earnings just surged 92% year over year in 2024.
An amazing jump, 92%. That's not just a slight improvement, that's a serious turnaround. It really suggests those big strategic moves are, paying off.
And the balance sheet, is it robust enough?
Yeah, it looks pretty resilient. Liquidity seems healthy. Their current ratio is above 1.
Hold on, current ratio above 1. Break that down for us. What does that practically mean for Nokia?
Sure. So it's basically a quick check on liquidity. If it's above 1, it means their current assets, cash, stuff they're owed, inventory are greater than their current liabilities, like short-term debts.
So they can cover their immediate bills.
Exactly. They've got enough liquid stuff on hand to cover immediate obligations, and that gives them a cushion, protection against market swings and the freedom to invest in growth like AI. Plus, they're actively working down some of that older legacy debt. Okay,
that sounds reassuring. But here's a question nagging me. If earnings shot up 92% this year, why are analysts only projecting a 10.85% upside over the next year? That $7.05 target feels maybe a bit low. Have we missed the boat?
That's a fair challenge. It gets right to the core of it. That 92% growth, that was the recovery, coming back from lower levels.
Oh, okay.
The 10.85% upside, that's more about the sustained growth phase analysts see now. Continued growth, yes, but maybe not quite as explosive as the rebound. But importantly, they're also giving back to shareholders while that growth happens. The dividend yield is stable, around 3.38%, and they're doing share buybacks. Management seems confident.
Okay, so rewarding patience. Now, that long-term appeal, it relies on their competitive position, right? Their moat. They've got those 4 main business areas. Which one is really giving them the edge right now?
Well, mobile networks is still the foundation, obviously, but the real the engine room now, network infrastructure and cloud and network services.
How so?
Think of it like this. If the internet's a city, Nokia is increasingly the company laying the high-speed fiber, providing the routers, the smart AI tools needed to run everything efficiently.
So building the actual digital highways for the cloud economy.
That's a good way to put it. And their tech advantage, their moat, is deep because they're embedded with huge carriers. Look at that expanded Vodafone deal for next-gen radio access. That's not a small project. That ties them directly into 5G development across Europe, and the N-scale partnership for data centers. That shows they're crucial for cloud growth, too.
And that diversity must help with risk, right?
Yeah.
If everyone needs your pipes, you're not just tied to one market doing well.
Absolutely. That's a huge plus. Their customer base is really spread out. Telcos, big cloud players, large companies globally. It shields them quite a bit from, say, a downturn just in Europe or just in enterprise spending. Gives them a lower overall risk profile compared to some others.
Okay, so fundamentals, solid, moat looks good. Let's talk catalysts, near-term stuff. What's pretty much guaranteed to happen in the next, say, 3 months that could move the needle?
Well, the big one everyone's watching is the Q4 2025 earnings report, expected around January 23rd, 2026.
And the expectation there is?
Pretty strong year-over-year growth based on the momentum we've seen and, importantly, recognizing revenue from some of these big partnerships like that Vodafone expansion.
So another beat could spark a jump like Q3.
Could easily happen, yeah. That's the hope.
And besides company news, there are those market structure things too, right? Things that can cause short-term moves.
Definitely. 2 key dates to watch there. First, there's a major ETF rebalancing event on November 12th. That's when index funds tweak their holdings.
Okay.
And then the institutional 13F filings deadline around December 15th.
Those 13Fs, remind us why we should care what big institutions are buying or selling.
Sure. So 13Fs are where the big money managers, hedge funds, mutual funds have to show what U.S. stocks they held at the end of the last quarter.
Got it.
So the December 15th filings will reveal how these big players position themselves in Nokia during Q4. If you suddenly see a bunch of well-respected funds building up large new stakes, well, that's often seen as a pretty strong vote of confidence. It can precede more buying.
Interesting. Okay, now for the really fun stuff, the rumors, the whispers. What's the speculative buzz around Nokia right now?
Well, there are sort of 3 main strands of chatter that could really move the stock if anything pans out. First, because the fundamentals are improving, there's talk on trading desks about potential private equity interests.
Oh, really? Like a buyout?
Could be. Whispers range from maybe taking a partial stake to, potentially evaluating a full buyout. It's just chatter, but it's out there.
Wow, okay. That'd be huge. And speaking of unlocking value, you mentioned that AI infrastructure is key. Any talk of separating that out?
Absolutely. That's the second big rumor. Speculators are watching for any hint of an AI spin-off announcement.
Why would they do that?
The thinking is that pure-play AI infrastructure companies often get much higher valuation multiples from the market than, integrated companies like Nokia.
Right.
So spinning it off could potentially unlock a lot of value for shareholders that's maybe hidden within the larger company right now.
Makes sense. And the third rumor, based on the cash flow and balance sheet we talked about, are shareholders hoping for a bit more cash back?
That's the one. Yeah, the third bit of buzz is that the board might be looking at either boosting the regular dividend or maybe even issuing a special dividend.
Wow.
Tied to the better cash flow and debt reduction. And related to that, we're also hearing some unconfirmed stuff about maybe faster deals to monetize their 5G patents, especially in North America and Asia. That could mean a surprise cash boost, too.
Okay, so lots of potential positive catalysts, confirmed and speculative, but we have to be critical. What are the downsides, the potential pitfalls here?
Yeah, absolutely need to consider the risks. First off, operational execution. These are massive, complex, global deals they're managing.
The Vodafone one.
Exactly. Rolling out 5G, integrating these partnerships requires laser focus and tight cost control. Any slip up there, any delays or cost overruns could really hurt investor sentiment fast.
And being so global, geopolitical risk must always be a factor.
Always. With that much exposure across Europe, Asia, everywhere, trade issues, regulatory changes, government policy shifts, these are constant background risks Nokia has to navigate. But it's worth balancing that by looking at their risk relative to the overall market.
How do we measure that?
The beta is a good indicator. Nokia's beta is around 0.59.
And what does 0.59 tell me practically if I'm an investor?
So a beta of 1 means a stock moves perfectly in line with the market, say the S&P 500. A beta below 1, like 0.59, means it tends to be less volatile.
Okay.
So if the whole market dropped, say, 10% in a bad month, you'd statistically expect Nokia to only drop about 5.9%. It suggests it's a relatively lower risk, steadier kind of investment, especially if you're worried about broader market turbulence.
Right, less dramatic swings. So pulling this all together, well, what's the bottom line for someone listening now? What's the investment thesis summary?
I think the bullish case for Nokia right now is pretty solid. It's anchored in strong fundamentals, that clear earnings recovery and positive technical momentum we discussed. But the real appeal, I think, is that strategic shift. They're positioning themselves as a core part of building out global 5G and AI infrastructure. They're laying the digital pipes, essentially, that everyone else needs.
So it sounds like the analysis suggests there's something here for different types of investors.
Yeah, I think so. The short-term trader might look at the upcoming Q4 earnings, the potential for another positive surprise, maybe some revenue kicking in from those partnerships.
Right.
But the longer-term investor, they might see a company that's becoming essential infrastructure, offering relatively lower risk growth tied to these huge secular trends like AI and 5G. Both seem to have compelling reasons to take a serious look at Nokia right now.